Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about OGE Energy Corp. Quarterly Report. OGE Energy Corp. offers a diverse range of energy services through its subsidiary. The company's primary business includes generating electric energy, transmitting electric energy, distributing electric energy, selling electric energy to customers operating various types of power plants, plus coal-fired generating assets, plus natural gas-fired generating assets, plus wind-powered generating assets, plus solar-powered generating assets, providing retail electric service to approximately 709,000 customers across a vast area of around 30,000 square miles. The recent surge in OGE Energy Corp's stock price can be attributed to several key factors. The company's strong financial performance, with 16% revenue growth over the past year and increased profits in the third quarter of 2025, has contributed significantly to its upward trend. Additionally, strategic investments and operational efficiency have enabled OGE Energy to expand its generation capacity and maintain a strong balance sheet. The announcement of a dividend increase to $0.425 per share, offering a 3.7% yield, has also boosted investor confidence. Furthermore, positive analyst ratings and price target adjustments from firms such as RBC Capital and Barclays have further supported the stock's growth. The company's transition to a fully regulated all-electric utility in late 2022 is expected to provide a clear pathway to long-term earnings and dividend growth. Overall, OGE Energy Corp's strong financial performance, strategic investments, and positive analyst ratings have driven its stock price increase over the past year, making it an attractive investment opportunity for investors. The primary drivers of revenue growth or decline can be identified through a review of the financial summary. On one hand, revenue growth is primarily driven by contracts with customers, operating revenues, commercial revenues, system sales revenues, and integrated market revenue. These areas have shown significant increases, contributing to overall revenue growth. On the other hand, revenue decline is attributed to a decrease in other revenues and residential operating revenues. These decreases have had a negative impact on overall revenue, highlighting the need for companies to focus on diversifying their revenue streams and improving performance in these areas. Net income and profit margins. A year of growth. The financial summary reveals a positive trend for net income and profit margins over the past year. In Q3 2025, net income rose by $12.6 million, 5.8% increase, compared to the same period in 2024, while YTD 2025 saw an even more significant jump of $61.9 million, 18.2% increase. This growth can be attributed to higher operating revenues driven by the recovery of capital investments. Profit margins also experienced a boost, with operating margin increasing from 32.5% in Q3 2024 to 32.7% in Q3 2025. The year-to-date operating margin rose from 25.3% to 26.2%. Although net profit margin is not directly stated, the increase in net income and revenue suggests a corresponding rise in this metric. The recovery of capital investments has been the primary driver behind these improvements, underscoring the company's ability to adapt and thrive in changing market conditions. The company's financial performance indicates a consistent trend of generating positive operating cash flow. In both 2025 and 2024, the net cash provided from operating activities was substantial, with $752.3 million in 2025 and $683.2 million in 2024. This demonstrates the company's ability to generate sufficient cash from its core operations, positioning it for long-term financial stability. The company's debt level and interest expenses have experienced significant changes over the past year. Long-term debt has increased from $4,614.3 million to $5,368.2 million, with a notable increase in OG&E senior notes from $4,174.9 million to $4,699.3 million. The company also issued $350 million of senior notes due April 1, 2055. Interest expenses have seen substantial growth, increasing by 10.6% from $189,300,000 2024 to $209,100,000 2025. This increase is attributed to the issuance of OG&E's senior notes in August 2024 and April 2025. The financial performance of OGE Energy segments and regions varied significantly in the given period. The electric company segment stood out as a strong performer, with revenue reaching $X billion and net income increasing to $242.9 million in 2025. This growth is consistent with the previous year, where net income was $225 million. On the other hand, the other operations segment struggled, recording net losses of -$11.6 million in 2025 and -$6.3 million in 2024. These results indicate a decline in performance compared to the previous year, highlighting areas that require improvement for OGE Energy's overall financial health. Management is optimistic about the company's outlook due to new legislation in Oklahoma and Arkansas, which will enable CWIP recovery of new generation capacity and strategic investments. The company aims to create long-term shareholder value through consistent earnings per share growth of 5-7% and strong load growth enabled by low customer rates. Capital expenditures will focus on maintaining and improving the safety, resiliency, and reliability of OGE and E's grid and generation fleet. The company has a history of paying dividends to its shareholders. In recent years, the dividend payments have been substantial, with amounts totaling $256.3 million in 2025 and $253.9 million in 2024. This indicates a commitment to returning value to investors through regular dividend distributions. That concludes the financial summary for OGE Energy CORP. Feel free to comment below, and I will be happy to answer them when possible.